Hi fellow traders, I hope everybody had a great day today. We are navigating our way through this summer months and taking it slow and easy, and we're trying to stay safe, managing our risk. And that's what's going to keep us in the game until the market picks up and we can start having those stellar days again. Now, the other day I was listening to E.T. in one of his speeches, and he said something that I really connected to our trading here. He said the greatest challenge that we will ever face is not outside of us, but inside of us. And that's so true in trading. The greatest challenges that we're going to face is not the outside challenges, because there aren't really challenges. It's going to be inside of us, because the challenge for us is not the market. The challenge is not our broker. The challenge is not our trading setup, our computer and all that. It's not our internet speed. The challenge is going to be what's inside of us, because what's inside of us is going to cause us to gamble, to take unnecessary risk. It causes us to take trades off too early. It causes us not to stick to our trading plans and not stick to our stops. It causes us to revenge trade or to overtrade. All of that is a challenge that's within inside of us, because a lot of us don't make it. A lot of traders do not make it. They will not get to the next level. And it's not because they're not smart or because they didn't have the talent. It's not because they didn't study or put in the work. It's because they failed to work on themselves. And, if you've gone through my the Trader's Mindset course, the first thing I talk about is understanding who you are and trying to figure out what the baggage you have that you're bringing into trading. Because some of that you're going to have to fix. You're going to have to get rid of. Some things you're going to have to change. So before you really get started in trading, you're going to have to find out, what baggage you're bringing. Were you the kid that took all the risk? Or were you the ones that sat back and just waited for everybody else to do it, and then you came along and did it when it proved to be safe? Those are two extremes, but both of those extremes will not make you a successful trader. So that's just one example of some of the things that we're going to have to work on inside of us. But we have to identify it first, and then we can start working. And that's one of the first points I make in that course. So you got to identify who you are as a trader, and then build your process around that. So something for you guys to think about over the weekend. I'm not going to be able to do a recap. We're hitting the road as soon as the market closes tomorrow. So the recap will probably be either Sunday night or Monday again. But just wanted to give you this to think about over the weekend, because we're going to have to start focusing on those challenges that are really going to make a difference, and stop worrying about these outside deals that we really can't do anything about. Some of them we can't. We can't do nothing about the market. Whatever broker we have, if you have a small account and you can only trade in SureTrader or CME Group or TradeNet, you can't worry about that. You just have to work on you and work yourself out of that. There are just some things that we can't worry about that's not going to help us get there. There are things that we have to do and we have to work on, inside of us, that's going to get us there. All right, so let's take a look at today, and I felt I was really patient on this, but again, this is a biotech stock, and I really need to just leave them alone this time of year. All of them are going to have some type of approval, some type of news come out. It's going to cause it to trade erratic. But look at the price action on this. This was just not a good trader. But I thought I was patient and waited. Here was the opening candle here. This was the opening range low. I didn't take this on the break because, number one, it didn't have a catalyst. And like I said before, I was making that adjustment. And it did sell off, close below, but I wasn't taking it until we lost the 20. I wasn't going to short into support. So once it got through, I got in, but it just never made the move down. Once I got in, it's just like it was waiting on me to get in before it turned around. And, had to go ahead and take it off. And you can see what this thing did pretty much, all day. But I didn't trade the news. I traded the chart. I traded what the market was telling me that it wanted to do. But this is what can happen. In the middle of a downtrend, and it was pretty nice, it just turns around and kind of works its way back the other way. So you can see I waited until what time? What the hell happened to my time? I figure I'm using a different computer, so I gotta format this thing right. But I didn't get in till maybe 9:40, almost 9:45, and was really patient. It's just one of these that didn't work. Plus, it was one of those biotech stocks that just, didn't cut it for me. So, took a little bit larger loss than I wanted to. This thing kind of popped up on me, and I didn't get to, stop out. I only wanted to give it $50, but this one just got away from me just a little bit. So, MU, I'm going to use my Thinkorswim chart because there's some things that I want to point out on this. But this is the chart, the Thinkorswim chart. This is a chart that I watch all day. Now I stream my SureTrader platform, and has the DOS charts, and I have them up there because it shows where I got in and out the stock. And I'll have the moving averages and everything up there. But this is a chart that I really make my decisions off of, because I've got everything I need on it. And one of the most important elements is it has the deviation bands from the VWAP study. And I use these a lot in my trading. And these are the charts that I started with. And it's real easy for me to see. So I'm used to it. I like the tools that I use, so I just stick with this. But what I want to show you, I did mark my entries and exits on this. My first one, let me go to the bigger, this blow up here. Okay, this blows it up a little bit more so you can see. I waited on this. Now I couldn't take this opening range because you see this huge candle here. Then we pushed back up, but the 200 was sitting too close to the opening range low. So no way I could do this on the break. I would have been shorting into the 200. But as you can see, it just ignored this level and just kept selling. And then we had a little bounce. It was kind of choppy. So I called myself waiting for this thing to kind of settle down. And by almost 11 o'clock, you would think this thing had settled down. So I got in, I got short here on this rejection. I got in under the 9. and it made a decent move down, but we couldn't get back down and retest the lows. So I came back up and I stopped out. So that's when I drew this trend line. I didn't draw until after it made this move. And I drew this line. I said, well, this isn't an uptrend. Okay, so and as long as this is in an uptrend, there's no trade on this. And we were watching this and watching this, and it didn't come back. And then finally, it started to pull back. And, you know, knowing that this is an uptrend, we were able to see, and, you know, as it actually happened, a nice solid bear trap. And that's all you can say this was, because we went up, we sold off, we sold off through the 20, and then here's the next candle open and push back up through the 20 and retest like the 200 going through here, and then, you know, the 50 and everything, and we showed this weakness, not being able to push back up through it. So obviously once you get back through under the 20 and under the 60-14 level, you're gonna think short, because you're showing weakness. You think this is the backside. It's coming back down on the backside of this move here, and it's safe to short. Well, you get in short, and this thing turns around and has the best looking price action it's had all day. A solid bear trap. And it's easy to see this after it's happened, but watching it and talking through it and me pointing out to you, you know, the things that I look for and how it looks on the chart and how it looks when you're watching level 2 and time and sales, how you can tell the change in momentum is coming. You know, all of that is the reason why you're in, the main reason for chat. You know, it's not to alert trades, it's to teach. And I think the best time to learn and to understand patterns and entries and exits is to watch it live and to talk through it while it's happening. And, you know, that's what we did. And that's why I wanted to use this chart today, because it's easier for me to point this out. And you can see when it came down, it never broke this trend line. And so I was, you know, like I said, there was no short on this until we broke trend. This was just a bear trap. And we ran up. Again, we actually made a new high. Then we started selling off. We sold off through all of the support. Worked its way through all of the support. Finally cracked and broke trend here. It tried to push and run up. And, you know, once we got through this, it was time to short. You know, and I was waiting here, waiting. But I had to go to the post office. And I needed to go so I could get back before class. And I was trying to wait for this so that I could get in before I left. But I ended up having to get in, you know, while I was getting ready to leave in the car. And actually, this is the candle that I entered on, because I was waiting for it to break this low. You know, yeah, I could have gotten in up here, but there was no guarantee that we were going to break this and continue down. So I waited. I got in. We did get a little pullback here and had a real nice sell-off. But, you know, I had to, by the time I stopped and got over to try to get out, this thing had bounced and pulled back like 10 cents on me. So yeah, I had to get out there. But this was just being patient, and this is what, you know, really we have to do, is we have to be patient. You know, this didn't give me the move that I wanted to, I wanted to see it get all the way down to 59. That was the goal for this. And it did get down to 59 around 5:30, 6 o'clock. But, in short trader, you gotta, you can't trade that late. So I just went ahead and took it off. And I wasn't going to hold through aftermarket because there's no guarantee that you're going to have volume or that you're going to be able to get out. So, I had to cover it here. It didn't, was still red on the day. I think it was still red by maybe $40-some. But I'm not looking at my official P&L until the end of the week. I'm not looking at it every day. I don't want it to get into my head. I don't want to start adding stuff up and trying to force myself to take trades so that I can make some type of average. I don't want to do that. I know me, and I know when I see something in writing, it sticks in my head. As long as I don't see it in print, I can work with it. And that's why I stopped watching my P&L throughout the day. That's why I tell people don't do it, because it can cause you to make some bad mistakes. Especially if you're setting monetary goals for the day and you're missing it by $20, then you're probably going to look to take a small trade that, I know I can get in, 300 shares and get a 10 or 20 cent move. Then you end up losing 50 cents. And so now you're further away and you got to get back and you try to trade, and that's when you start revenge trading. You start gambling on things, and the next thing you know, you got 25 or 30 tickets, and instead of being up almost $200, you're down $200. So I just don't entertain that anymore. I don't really care about what I make, because I know if I trade the right way and I trade the way I know I can, the money's going to be there at the end of the week. And that's just my philosophy. I'm not saying watching your P&L is wrong. For some people, it works for them. But it's just, for me, it doesn't. It just doesn't work for me. All right, so we did take off. I did have to take off my PLNT swing finally. After that strong day yesterday, we made it up and hit our 46.50 target. Made it all the way up through 47. Today, we had a massive sell-off. And I had my stop right at the low of this candle, which was 45.50. But it filled at 46, so I got, only 4-cent slippage, which wasn't really bad. It just hit me when it was on a quick dip and took me out. But not a bad haul. Overall 18.55.54, and even better, I'm gonna go into the weekend all cash for the first time in months. So next week, I'll have my first true P&L report, because I've got all of my trades have been closed. So we'll see, what I made so far this month or what I booked. But, again, on this swing trading, I have no goals whatsoever. We have these simple patterns or setups or strategies, and they work. I'm a part-time swing trader, and you could trade these full-time, or you can trade this part-time along with the day trading like I do it. So when the day trading's slow, a lot of times the swing trades are moving. When the day trading's pretty good, sometimes the swing trades are slow. but it all works out for me. And we did have one that worked pretty good. Let's see, what was that? Was it CGC? We had an abbreviated watch list this week. You know, Sunday was Father's Day, so didn't get to do a watch list session and all of that. But we did one on Monday, and we identified this CGC as, you know, our 20 EMA crossover setup. And what we do is we look for it to hold that cross and, you know, give us an entry. Our first target is a 52-week high, because we're looking for this, you know, we're looking for these, and it has to meet certain conditions, because if you run a scan for 20 EMA crossovers, you'll come up with a bunch. But, you know, there's a certain pattern that we're looking for. And if we see it, you know, we often get moves like this. So that PLNT was a 20 EMA crossover as well. But it made a nice move today, right up to the 52-week high. And that's where you want to take profit. Now, what usually happens with these, you make a 52-week high, and then it pulls back, and you want it to trade sideways for about 5 to 10 days, and then you look for it to break out and break, and it'll usually make a stronger break through the 52-week high, you know, and give you another good trade. So this was excellent this week. All right, guys, so that's gonna do it for me today. So we'll catch you guys bright and early tomorrow. We'll see if tomorrow's gonna give us anything. If not, we'll just sit on our hands, take what we made this week, and come back next week. So you guys, take it easy. Have a great night, a great evening, or morning, depending on where you are. And I'll see you in a few hours.